Many of you watching this video may have been wondering for years and years how your next door neighbor drives a Tesla while being at home in his pajamas while you're slaving away at work from 9 to 5 to just afford your groceries. Or you may be a kid at school wondering the same thing. How do I become the next Warren Buffett or Elon Musk? While this may be an exaggeration, most of you have come across this video because you are eager to know how investing works. Before learning about investing, it's important to know how the stock market works. This video will give you a basic understanding on how the stock market works and what you would need to start investing in the stock market. First things first, what is a market? As you know, it's a place where you go to buy something. Well, it's the same for the stock market. It's a place where people gather to deal in shares. That raises the next question. What is a share?
Shares are units of ownership interest in a corporation that exists as a financial asset, providing for an equal distribution in any residual profits.
Confusing? Let me simplify this for you. Let's say you and your friend Anna decide to start a buy now, pay later business called FuturePay, similar to Afterpay. You each invest $50,000 at the beginning, with each person owning half of this new company. Business starts booming and you realize you're making a lot of money. You could, however, make more money if you expand internationally. But this requires a large investment. You just don't have enough money in the bank to do this. Anna has an idea. She says,
"Let's go public."
What she means by this is that you will sell a portion of the company to outside investors in return for capital for the business to expand. This process is called an initial public offering or an IPO. For example, you may now decide to sell 40% of the company to the outside public. Let's assume you split the company into 100 equal portions. You and Anna keep 30 portions each and sell 40 portions at $5,000 per portion to the new investors. In other words, you have offered 40 shares in the company at $5,000 per share. Congratulations, you have now raised $200,000 to expand your business. This simply is called an initial public offering. If money has been raised and the business is booming, why bother about the share market? As you know, the investors who bought shares in your company are entitled to a share of the profits of the company. They will receive this benefit in the form of something called a dividend. But the people who invested also want to make sure that they are able to sell their shares in case of an emergency or if they need cash for any other reason. They should be given an incentive to invest. This is where the stock market comes into play. Once a company goes public, its shares can be sold in the secondary market, which is the share market. Now let's see how a transaction in the share market works. John is an investor who bought shares from FuturePay. John has decided that he wants to sell his shares today. He goes to the market and says, "I want to sell my shares at $20,000. Jane, who had heard about FuturePay, wants to buy this share. She says, "I will buy this share at $15,000. John does not want to sell his shares at $15,000 because he believes that the share is worth $20,000. John stands his ground and holds his price up at $20,000 while Jane holds the price up at $15,000. Peter, who is another person who invested in your company, has seen Jane holding her price up in the market. Peter has decided that he wants to sell his share at $15,000 as he feels it's a fair price. Peter offers his share at $15,000 to Jane. Now, Jane is a new shareholder of the company while Peter has ceased to become a shareholder. This has essentially created a transaction. Now, let's say that seeing Jane buy a share at $15,000, 100 other people come into the market to buy a share. But there isn't many people to sell. The other shareholders have decided that they want to sell the share at a much higher price. But John still has his offer at $20,000. One person in the market decides that they would go ahead and buy John's share at 20,000. There you go. The market price is now $20,000. Basically, this is exactly how the share market works, but in a digital form. Almost every country in the world has their own share market, allowing businesses to list in their country, which helps them raise money from local as well as global investors. A share market that functions efficiently is a valuable tool to a country's economy. To invest in shares, you would simply have to open an account with your local stockbroker, which can easily be done possibly online. Once an account is opened, you're ready to go. That ends this short video about the share market. If you found this video helpful, give it a thumbs up and subscribe to my channel. I will see you on the next video.